Hi, it's Trey Jones, and in this video I'm going to walk you through when and how to enroll in Medicare, how to avoid the late enrollment penalties, and what to do and not do if you have employer coverage. I'm also going to make sure you're aware of the one-time only rights that you'll have available to you as a new Medicare beneficiary. We're just going to jump right in here. Most of you will become eligible for Medicare when you turn 65 by virtue of having paid taxes probably your entire working life. Now, when I say Medicare, I'm referring only to your basic federally provided Medicare benefits, and there are two parts to this. There's Part A, which is your hospital coverage, and Part B, which is called your medical coverage. Together, Parts A and B are often referred to as Original Medicare, and Original Medicare, Parts A and B, are going to form the foundation or the basis for your health care coverage in retirement. There are two ways you can be enrolled in Medicare. First, if you're going to be drawing Social Security before you turn 65, then you should automatically be enrolled in Medicare, will not have to do anything. In this situation, you'll receive your Medicare card about 3 months before the month you turn 65, and your Medicare benefits will begin the first day of the month in which you turn 65. Alternatively, if you will not be drawing Social Security benefits before 65, you will have to enroll yourself, which is very easy. To enroll in Medicare, contact Social Security. You can walk into one of their offices, you can call them on the phone, or probably the most convenient method is just to go online and fill the applications out. In this scenario, you should receive your Medicare card about 4 weeks after you apply. Now, not everyone needs to enroll in Medicare at 65 when they are first eligible. In fact, there are some very common situations in which you should not enroll when you are first eligible, and I'm going to go through those with you in detail in just a moment. First, I want to briefly look at what you can expect to pay for Parts A and B of Medicare. Part A, which is called your hospital coverage, as we've said, more accurately could probably be referred to as your inpatient hospital coverage. In order for Part A of Medicare to be billed on your behalf, you have to formally be given inpatient status by your doctor and the hospital billing staff. So you can't just be there for observation. The rule for Part A says that as long as you, or in some cases a spouse on your behalf, have worked at least 40 quarters, which is 10 years, and you pay the appropriate taxes during that time, then you will qualify for premium-free Part A. So if you happen to be taking notes right now and you've worked 10 years and paid taxes during that time, then you can write a 0 down beside Part A. Part B is called your medical coverage. Part B will cover visits to your primary care doctor, any specialist that you see. It's going to cover durable medical equipment, ambulance rides, emergency room visits that don't result in an inpatient hospital stay. So think of Part B as your outpatient care. Now, Part B of Medicare is also the first way that Medicare will reach into your pocket. There is a monthly premium required for Part B, and this can be taken out of your Social Security check every month or billed quarterly if you're not yet drawing Social Security. At the time this video is being made, the standard monthly premium for Part B is $144.60. Now, that's the standard premium. If you are considered by Medicare to be a high-income individual, then you will likely pay a higher monthly premium for Part B. If you file your taxes as an individual and your annual income exceeds $87,000, or if you file jointly with a spouse and together your income exceeds $174,000 annually, then Medicare will add what's called an income-related monthly adjustment amount to your Part B premium. Medicare bases your Part B premium amount on the income you reported on your most recently available tax return, which is usually from 2 years before the year you're enrolling in Medicare. For example, if you enroll in Medicare in 2020, they'll base your Part B premium amount on income you reported on your 2018 taxes. And you can always find the most up-to-date Part B premium information, including the income brackets Medicare uses, on Medicare's website, which is medicare.gov, and I'll show you how to click through that now. Alright, so here we have Medicare's website. You can find this by going to www.medicare.gov, and when you get there, you'll see some iteration of this page. You'll see the banner image with the happy couple smiling, and then above that you'll see part of the menu, which there are just several clickable blue buttons over this banner image. You're going to mouse over but not click on the second blue button that says Your Medicare Costs. And when you do that, you'll see a drop-down menu appear. And I've done this, I've not clicked on anything, just place your mouse over the button and then bring your mouse down and click on the hyperlink that says Part B costs. And as you might have guessed, that is going to bring you to the page that has the Part B costs on it. You'll scroll down, and as you can see, they've still got the 2019 information up. Scroll down a little further, and they've added the 2020 information. They do update this page on a fairly regular basis. And so you can see the income brackets. You can see the first bracket here, which is for an individual who makes under $87,000 or a couple that makes under $174,000, and you can see the corresponding premium amount. And so what you'll do is just look and find, according to your income, where you fall in these income brackets, and follow it over, and you can see the corresponding premium amount. And that's how you'll find the Part B premium that you can expect to pay. Now, as I mentioned earlier, not everyone needs to enroll in Medicare when they're first eligible at 65. If you have an employer's group plan that you want to keep, and the employer has more than 20 employees, which most do, and I just want to stop here quickly and stress how important the size of the employer is. It's important because it determines whether the employer's coverage is primary or secondary to Medicare. If the employer has fewer than 20 employees, then the coverage of that employer's group plan is going to be secondary to Medicare. In this situation, you're going to need to enroll in Medicare when you're first eligible to avoid any late enrollment penalties. If, however, the employer has 20 or more employees, which again, most do, then you've got some options. Okay, you can either compare the employer's group plan to the options available to you under the Medicare program, and I'll say that it's not uncommon at all for Medicare and a Medicare supplement or Medigap plan like Plan G or Plan N and a drug plan for the premiums to be less expensive compared to your employer's plan, and to provide coverage with a lot fewer restrictions on how and from whom you can receive your care. So that's something that a lot of people are doing, and it's a very good idea to do that. Or if you decide you want to keep the employer's plan, you're going to want to defer Medicare. What you don't want to do is keep that employer's plan and also enroll in Medicare. There are two reasons for this. First, you can't completely, fully utilize your employer's plan and Medicare, so it doesn't make sense to pay both premiums. Second, and very, very important, when you enroll in Medicare, specifically Part B of Medicare for the first time, it's going to trigger the beginning of a 6-month window that you will only get once in your life. Very important. During this 6-month window, none of the insurance companies that would sell you a Medigap or Medicare supplement plan like Plan G or Plan N are allowed to look at your health. They can't put you through underwriting. They have to enroll you regardless of what health condition you're in. You'll only get that once in your life, and that's especially important for folks who maybe are dealing with some common health issues by the time they turn 65. So if you keep your employer plan that's primary to Medicare and you don't enroll in Medicare at 65, then when you're ready to retire, 3, 4, 5 years down the road, 10 years down the road, it doesn't matter, Medicare will give you an 8-month special election period expressly for the purpose of enrolling in Medicare. And as long as you've kept that employer plan, you won't be assessed any late enrollment penalties. One last thing. If you contribute to an HSA, a health savings account, as part of your employer plan, and you plan to defer Medicare at age 65, then you will likely want to stop those contributions 6 months before enrolling in Medicare. When you enroll in Medicare, you're no longer allowed to make contributions to that HSA. And you can use funds that are already in that account to pay for qualifying Medicare premiums. You just can't make any new contributions. Part A of Medicare will actually become effective 6 months retroactively, 6 months before the date you apply. So if you have made contributions to an HSA in that 6 months before applying for Medicare, you will probably incur a tax penalty. So that's just something to be aware of. I know that's an odd rule, but again, if you're not aware of that, then you'll probably incur a tax penalty for those contributions. So if you're ever in this situation, just consult a tax professional before you do anything. I hope you found this video helpful. If you did, consider giving it a thumbs up and clicking the subscribe button. By doing this, you're just going to help other people find us more easily on YouTube. If you need help with Medicare, call the number on your screen. Our service is absolutely free to you. Medicare is all we do. Thank you for watching. Hope you have a great day. Bye-bye.